The hardest thing in our sector is getting access and exposure to the right assets. And that's what I saw in this entity, a portfolio that was built largely in the last 6 years, largely in the down market.
5% royalties, like 35,000 ounces of cost-free, 100% margin gold. Arguably the best royalty deal in the business still today.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, my next guest is the CEO and president of Osisko Gold Royalties, Mr. Sandeep Singh. Okay guys, Jay Martin here, CEO of Cambridge House, and we are looking for our next gold investment. I'm joined today by the president of the Osisko Gold Royalties, Sandeep Singh. Sandeep, how are you?
I'm good, Jay. Good to be with you. How are you?
I'm really good. And I'm excited to hear the story from you and dig in, because the Osisko Gold Royalties is a story that I've been quite familiar with over the years. I think my audience has been quite familiar with over the years. But you guys made a lot of changes recently, and so I'm excited to hear that from you and to share that with our audience. The quick backstory is Osisko Gold Royalties was spun out of a company called Osisko One, founded by Sean Rosen. They purchased the Canadian Malartic mine, invested $1.2 billion into that project, sold it for $4.3 billion to Agnico and Yamana, retaining a 5% top line royalty on that, what is Canada's largest producing mine, one of the world's most important mines. 5% royalties, like 35,000 ounces of cost-free, 100% margin gold. That was the founding asset of Osisko, and arguably the best royalty deal in the business still today. And you guys have built on top of that. So Sandeep, for anybody who's not familiar, who's just tuning in, why don't we start with just the elevator pitch? You break it down for us and let anybody into the story who's not familiar.
Yeah, happy to, Jay. And frankly, I think you did a pretty good job. So I'll tread on a little bit of what you just said. The company is, got a really exciting business model right now. So we are the fourth largest royalty company in the sector, predominantly precious metal focused. So gold and silver is where we live. Circa $2.5 billion Canadian market cap, and a set of royalty and streaming assets that really matter in the sector. We feel. Fame, Malartic being the flagship asset, as you mentioned, 35,000 roughly ounces, 1,000 ounces a year for free. And that underpinned the growth. Over the last 6 years since that formation of the company, we've gone from one producing asset to now 17. We've gone from 5 assets in total to now, roughly 140 royalties and streams. We are still in very safe jurisdictions. So 3/4 of our value is in Canada. Even more so just in North America. So the way to think of us is, gold and precious metal royalties and streams in good jurisdictions. And we're also associated with some of the best miners in the business. So it's a fantastic business. It generates a 95% cash margin, as most of our ounces are free. And it's got a lot of growth. We're going through a phase right now and in the next several years where we can grow our business in leaps and bounds with assets that we've already paid for. So it's a pretty exciting time for the company.
Awesome. Yeah. Now so you took over as president in January of 2020, almost a year ago. And, Sean Rosen speaks very highly of your background as an investment banker, you're founder of Maxit Capital prior to Osisko Gold Royalties. And in his words, he wanted you to take the seat because he wanted to bring some hunger back to Osisko Gold Royalties. And I'm curious, you knew the picture, you knew what the job you were getting into. What excited you at that point a year ago, and why did you take this seat?
Yeah, look, it's a good question, Jay, and there's several answers to it, I guess. So yeah, I came out of a 15-year mining investment banking career, co-founded Maxit with my mentor. So I'll give him some credit as well, obviously. But throughout that period, throughout that career, the Osisko Group was a core client of mine. Had been involved in, you referenced it at the onset, was involved in the hostile defense, involved in the sale to Agnico and Yamana, obviously, that generated the 5% royalty and the formation of Osisko Royalties. Since then, been advising Sean on almost putting in most, if not all, if not most, the assets into the company. So had a first row seat to the story that is Osisko Gold Royalties. And I guess through that, pretty special insight about the value of this portfolio of assets. And that opportunity is what led me to switch gears and join and be part of a bit of the succession planning that Sean was looking for at the start of the year. Yeah, you said almost a year. It's a bit crazy what this year feels like. It's kind of the shortest and the longest year I've had in some time. But that's what led me to it. The hardest thing in our sector is getting access and exposure to the right assets. And that's what I saw in this entity, a portfolio that was built largely in the last 6 years, largely in the down market, where competition for assets was less. Sean's got a pretty good eye for assets. Anyone that knows him knows he gets affiliated in real things. So that was the starting block for me. My skill set to grow that to the next level is deal making, which is where I've lived and breathed the last 15 years, negotiating, structuring transactions, relationships. But if you don't have the right starting blocks, it's pretty tough to rearrange. So that's why, Sean brought me in to kind of take the company to the next level. For that, we just went through what we think is a very important catalyst transaction. We announced 6 weeks ago, which was the splitting of the royalty and streaming business from the one core development asset that we had in the company. And in that started up Osisko Development Corp, which Sean will be running. And as he takes a step back to the chairman level, executive chairman level of Osisko Royalties, I'll step into the CEO role and kind of complete that succession planning that we had set out on at the start of the year. So that's a little bit of what excited me, the opportunity, really, the quality of the assets, the way that they were being traded, which were valued, which didn't make sense to me. And I think we've undone a lot of the reasons for that valuation gap and look forward for both companies to really excel here in the next phase.
Now, I want to dive into that a little bit. You say it didn't make sense to you, and I was going to ask you, I'm curious, what was the catalyst to spin out Osisko Development Corp? Was it feedback from shareholders? Did you just see this isn't as clear as our business model could be? What was driving the decision to spin out Osisko Development Corp?
Well, look, I mean, it was always, when we announced the acquisition of that company a year ago, a company called Falco Gold Mines, we always said, Sean initially, and then me when I joined, we always said that we weren't finished with the structuring of that transaction. We brought it in-house. We were going to put it in the right vehicle. We were going to own less and less of something that's more valuable and get back to segmenting those assets. We never said we were going to build it within Osisko Royalties. That being said, the perception was that we were a royalty company and a development company, and we deserve to be kind of a blended version of whatever that is. And so, despite what we said, that's where we ended up. And so we were always on this path. It took us a year, and luckily in that year, the gold price rose about $500 an ounce from when we bought the assets. So a lot of value was created. We created further value with the transaction, we believe, and set up what we think is, in Osisko Development Corp, a North American, not too much hyperbole, but a North American intermediate in the making that the guys just need to execute on. But that was always the path. That was always where we were headed. At times, we thought that might stay private longer. In the end, the equity markets opened up. The world is a very different place now than it was a year ago. And we felt ultimately the right place to put those assets were back in a public vehicle, but in a public vehicle with a better portfolio of near-term and longer-term flagship assets, and with a different team this time around, with Sean at the helm, pushing forward both the exploration aspects of those assets, but also the mine building aspects of those two assets.
Right. Yeah, I mean, it makes sense. The changes that you've made, because the retail market, they want simplicity and a clear vision towards share appreciation, right? And as much complexity as you can eliminate, the better. Yeah, smart.
No, look, and that's what we heard as well. You asked the question, is that what our investors were looking for? And the answer is yes. And frankly, it's what we were looking for as well. In the process, as you said, we spent a year feeling too complex.
Okay.
Looking too complex for some. We confused some people. We probably detracted some others from buying it. And as I said earlier, we kind of missed the whole run that our peers in the sector have enjoyed this year. So that's the past, and it's also the opportunity in front of us now and in front of shareholders. I think we've we've broken the back of what we needed to from a structuring perspective, and now we're set up to get back that value that we missed. And when I look at the sector as an investor myself, I struggle, to be honest, to find value in a lot of places. When we speak to institutional and retail investors, they say the same. We are in the process, and I guess when I say in the process, I mean in the next 2 or 3 weeks of finishing the exercise, where on the other end of it, we will have the royalty company with some pretty special set of assets, growing, getting better all the time, trading at 1x NAV, so a third of where our peer group trades, as well as one of the better development stories in the sector, trading well below NAV. So we think we've come up with 2 instruments that the sector should pay attention to, and that's certainly the sense that we're getting as we move forward.
And it's largely why I wanted you guys on this program, Sandeep, because of the quality of your streaming deals, 95% cash margin. You guys are in safe jurisdictions, and you didn't run in the spring, right? There's still a lot of upside to unlock here, so timing looks really good. Now let's jump into your royalty deals right now. Talk to me a little bit first. How many royalties do you have right now with the Osisko Gold Royalties?
Yeah, we have about 140, I think the number is right now, royalties and streams. 17 of those are producing.
Okay.
They're more kind of transitioning from developer into producing every day.
Yeah.
As I mentioned to you earlier, that production is largely Canadian or North American centric or America centric. The growth is as well, importantly. So we're staying, we're showing growth in our company, but we're staying in safe jurisdictions.
Yeah, that's been a theme for you. It's always been a theme for you. You're very jurisdiction specific.
Yeah, look, I think there's enough risk in the mining business. There's enough asset risk. There's enough political risk that if you can not add geopolitical risk to that, then I think you're doing your shareholders a service. Obviously, the group as well. Canadian brownfield camps is in our DNA. When you think about the Canadian Malartic stories, so. And we just felt over the last 6 years, Sean driving the bus, me advising him behind the scenes, that there was enough to do in those spaces where you didn't have to drift too far away. And that proved to be the case. And that's how stories like, Osisko Mining came to be in a pretty forgotten camp in Quebec. That's how a new lens was put on the Barkerville Caribou camp, which we now own. The group owns outright. We have a royalty on it. Sean at Osisko Development has that camp to himself. So there was enough to do where we didn't have to go too far afield. We are a global company. We look everywhere, Jay, and we have assets all over the world. But the focus is definitely to stay in places we know well and understand.
Yeah, well, I like that point. If you can add a level of predictability to your business model in the resource business, take it 100%. Okay, now 140 royalty deals, 17 are producing. Touch on some of the highlights of your producing assets, Sandeep.
Yeah, happy to, Jay. Look, obviously it all starts with Canadian Malartic and the 5% open pit royalty that we have there. We talked about it again, roughly 35,000 ounces a year for free. And that runs, depending on who you listen to, into the later stages of this decade. Toward the end of the decade, the open pit will start to get depleted. So it's a great place to wake up in the mornings, is to think about that as your flagship asset. The exciting thing there is, more recently, is the underground that's been developing. So there are currently 10 million ounces beneath the pit that Agnico and Yamana have delineated. It's growing seemingly in leaps and bounds. The latest exploration results that they put out there on a zone called East Goldie, which is the highest grade and kind of almost twice the grade, or roughly twice the grade of what Agnico's mining next door, was exceptional. Wider widths, good or better grade, an expectation from us and frankly from them that the resource in the new year will grow substantially. And they're moving towards a PEA study in Q1 as well. I think they might have said February. And that'll be an important milestone for people to understand that underground component. But it's today 10 million ounces underneath the most efficient mill, if not one of the most efficient mills in Canada. They're talking about it being several hundred thousands of ounces for decades. So it's a second flagship asset for us, sitting underneath our current flagship asset, and our shareholders don't have to pay anything for it. So it's we have a range of royalties from 3 to 5% on those undergrounds. Most specifically, it's 5 on the highest grade portion. When you average out where the ounces are, it's closer to 5 than 3. So it's an excellent, second flagship asset, or the transition of our first flagship asset. So that's a lot of value that's kind of coming into focus in the next several quarters, or next couple of quarters, I should say.
Okay.
And as they put more information out there, it will only benefit us, is our view.
Okay. Now getting into the development assets or the project pipeline, Sandeep, what are you looking to show shareholders in the next year?
Look, I think maybe I'll take a step back and want people to understand that, although Canadian Malartic is a fantastic asset, and you can't talk about Osisko Royalties without talking about that and that massive catalyst. There's a lot of other good things going on. So maybe I'll finish the near term story, and then I'll get to your question.
Please.
There's growth in our producing assets. So currently, Victoria Gold Eagle Mine is ramping up. That's Canada's newest mine in the Yukon. We have a 5% royalty there. It's ramping up every month. We're getting more gold. Maybe not as quickly as some would have liked, but better than we would have expected. Something that big to come on as well as it has is a win. And every day they're making progress there on the mechanical side of just getting more tons on the pad. So that's a good growth component for us this year, and we'll drift into growth next year. We have a sizable kind of circa 10,000 ounce a year contribution from Mantos Copper in Chile. They're going through a debottlenecking expansion exercise that will add growth to us towards the tail end of next year on an annual run rate that probably shows a lift of about 50% to our account. So 10 becomes 15,000 ounces, give or take. So those are other things in the portfolio currently that are poised to add a lot of value. Beyond that, the development stories that you were talking about, and we have about a 50% development weighting to our portfolio. So on an NPV perspective, so higher than our peer group. And those are assets that we bought and paid for that are now transitioning, various stages, but transitioning to producer status at arguably one of, if not the most conducive equity markets that we've had in a long time. So obviously the gold price is supportive to those companies. The equity markets have been supportive to those companies in the last year, so they can fund their CapEx programs. And those things are coming along at a really good time for us. So as those assets transition from the development column to the producer column, that's really when we get the best benefit from them. And that's happening organically. Those are things like, obviously I mentioned a couple of them behind the scenes. Osisko Mining is pushing forward their high grade 5 million ounces in Quebec. Falco Resources made progress in the last couple of weeks with an announcement with Glencore, which hopefully starts to pave the way for a clearer path to production. We've got a 1% NSR on a South 32 asset in Arizona Mining, or the Hermosa project, which was Arizona Mining. So there's a lot of good development stories at various stages, but all making good strides towards the producing side of things.
Okay, yeah, and I'm actually talking to John McConnell as well today from Victoria Gold.
Oh, yeah? Okay.
Yeah, looking forward to catching up.
Send them my best.
I will, absolutely. Okay, now, when it comes to hunting down new deals, right, the landscape has shifted dramatically from sort of the last 6-8 years to what you're looking forward to. So does that change your approach? And I guess what I'm asking is, are you still in hunting mode now, Sandeep, or is it time to harvest the deals you've put together?
Look, we're always looking, because if you don't look, you don't find. Sure. And you don't get to choose your timing for when some of these assets, some of these operators are open to selling royalties and streams. So we're always looking. I'd say we think our pipeline is good. It's good to very good. There's moderately sized transactions that we see out there that still move the needle for us. The good thing about our portfolio is we don't need to do $500 million transactions to show growth. We have a lot of it internally. So if we don't see value out there, we'll sit back and we'll harvest, as you say, and let our projects mature organically and let that growth come into the sector, into the company. But we still see some things out there that can be added benefits. So it's a bit of both. The nice situation that we're in is we can be disciplined, and we will be disciplined. because of that growth pipeline that we have. I mean, we just added to the Osisko Development transaction, we just added essentially a 20,000 ounce a year stream and royalty to us in 2 assets. We got paid to take it. When you see through the value of the transaction, the going rate for that right now is probably $500 million US. So we feel like we've been adding growth in the right ways. The portfolio will continue to do that on its own. And then if we can add incrementally to that, we will. But, there is a lot more competition out there. It tends to be on the smaller scale. There's a lot of new entrants. There was a new royalty company almost every week over the course of the summer. And there's people out there trying to, issue paper for royalties and do smaller things. And in that space, it has gotten pricey. We've let those deals go by intentionally. In the larger scale or the moderate size deals where you have to use cash the competition is really the same competition it's been for the majority of the last 6 years.
Interesting. Okay. Yeah, it's that classic alligator approach, right? Let the small meals pass you by and then grab the deer.
Let's be honest. I mean, our job one for us is to get paid for the things we have. I mean, that's my priority right now, is to make sure we daylight value for shareholders for the things that we actually have. And we have a long way to go to get there. We've done the work to get there. Now it's a matter of being consistent in our messaging and proving to people that we are on the right path. And I think that's resonating well. And that's first prize. If we can add to that, that's great. Obviously we'll, it's a pretty capital intensive sector. There's more projects being greenlit as a result of the gold price and the silver price being high. So that, even with added competition, there's still more product out there. So that we'll try to be picky and stick to good assets and good jurisdictions where we get a good return. If those things don't prove out to be true, we'll sit on our hands.
Right. Okay. Well, look, Sandeep, I appreciate you breaking it down for us and for myself and letting us inside a little bit to hear the story from you. I guess to break it down on my end, that's Osisko Gold Royalties is the story of remarkably high margin producing assets that have more upside and a very active development portfolio, right? With a new CEO, I mean, incoming, right? New president, soon to be new CEO, and doing the hard things, right? Which is doing the disruptive changes to your own business is something most entrepreneurs aren't willing to do. It's challenging, it's scary, and it's uncertain, but you're doing the hard things, or you've done the hard things, and it's paying off.
No, look, I appreciate that, Jay. And look, I was fortunate enough for Sean to kind of give me the keys with the mandate to do that. And obviously that came with a high level of trust between us, given the relationship we've had over the last 15 years, really. And so I think we all knew what we needed to get done. We didn't, we took our time and we got it done right. I think the feedback on the transaction has been tremendous. I think it's been unanimously positive. So now it's a matter of consistency, stability. The portfolio, the good thing is I don't have to do too much. The portfolio continues to deliver. It's outperforming in most cases, and there's way more positive catalysts than any kind of negatives that I can foresee. So we'll stay in our lane, which is the metaphor I like to use, and unlock that value and hopefully add to it. And it's a pretty exciting time to be. It's the first day of the rest of our lives. So we're pretty excited about the story we're telling right now. And again, back to I think maybe it was your first question about why I joined. It was the opportunity again, and pitching Osisko Royalties at 1x NAV with those catalysts. I like our chances.
I love it. Okay. Awesome. Sandeep. Thank you. So guys, Osisko Gold Royalties, ticker is OR on both the TSX and the NYSE. You can see actually in the background there with Sandeep. But thanks so much for coming on, Sandeep. It was great to get to know you, and I look forward to having you back on in the future.